I wanted to talk about data and using data within a startup or scale up as a finance leader. Now, I am going to just talk about at a high level as to why data is important. Some of this you'll already know, but I wanted to specifically look at the challenges with data within startups, particularly that earlier stage. I will say, though, that the data challenges that startups have can often flow into scale up stages as well. And I've certainly seen firsthand within a scale up how data issues can really hinder a business, can slow down fundraising, and can even be one of the catalysts for a company going bad, which is not something you want to see, but I have seen this in the past. Hi, my name's Alysha Randall. I'm a fractional CFO and I also train new and aspiring CFOs within startups and scale ups. I'm an author and wrote Financial Leadership Fundamentals. If you're interested in becoming a CFO in a startup or scale up, you might want to check out my book or subscribe to this channel where it's exactly what I talk about. So, as I mentioned, data is something I wanted to talk about. It is a big part of a finance role. Now, obviously, there's the financial data within the finance department. So think about all of the transactions that are included within your general ledger. That is obviously data. And then also your non-financial KPIs. So everything that is happening outside finance as well. So whether that's from a commercial perspective, an operations perspective, I would say with nearly all of the businesses that I work with, data is one of the biggest challenges within the business. And largely because data tells us so much information. And in order for us to make the right commercial and financial decisions, having that understanding of the data is really critical to be able to make those decisions. And so, as a finance leader, you are kind of sitting in the middle where you have to think about what data do I need in order to make these decisions? What data is important in order for us to hit our strategic goals? What data do I need to provide to all of the third parties, whether that be, say, the board, investors, other third parties such as debt providers or key suppliers, but also, is this data accurate? And I would say that whether the data is accurate or not is sitting more and more on the CFO's shoulders. So it's not necessarily a tech issue. The tech may just generate the data for some instances, or operations do, but actually interrogating that data and deciding whether it's accurate or not, it's usually the CFO that does this piece of work. So if that's not something that you've spent too much time on and you do often just rely on the data that is provided, I would stress that you do need to spend time thinking about what that data is, where does it come from, what is the definition of it, and how can it be improved, and the validity of that data. Again, because so many things are reliant on it. So not only are you making business decisions off the back of that data, but the rest of the business is as well. So just to look into those topics a little bit more detail. So financial data really is kind of the backbone of what you do. So it's looking at performance, looking at trends, and obviously looking at risks as well. The CFO's role is to help founders and the business maximize growth and minimize risk, not just the fun stuff of growth, but risk is also. And so being able to provide insights into all of those different categories, data plays a big part of that. So the numbers can tell us information all the way from, say, cash flow patterns to customer behavior. And it helps us, particularly with financial management, to forecast, to budget, to strategize effectively, and making sure that business decisions are based on this analysis or evidence rather than just gut intuition. This is quite a big transition, particularly when you're moving from startup to scale up, or you're post a fundraise and you have a more experienced board. And so they will want to substantiate some of the decisions or some of the information that you're providing them. So it isn't just data on a spreadsheet or the transactions in your general ledger. It really is tools that reveal both the health and the trajectory of your business. So, for example, if you're analyzing sales data and you can uncover seasonal trends that might help you better with, say, inventory management or customer behavioral management or marketing strategies, sales strategies. If those kind of seasonal trends aren't necessarily accurate, then it's harder to make those decisions or that analysis, where if it's accurate, it is. Some in-depth expense analysis also can highlight costs that are ballooning, potentially efficiency improvements, those kind of things. That's probably more of a given. If you're a finance leader, understanding finance data is obviously incredibly important, but it's usually the non-financial data that becomes more and more important as you become a CFO. Data-driven decisions also provides the businesses beyond guesswork, as I mentioned, but it does also help you with decisions that you want to make that's a bit more risk-taking. A perfect example is expanding into a new market. So this is where you would be looking at data outside the business. So thinking about what your competitors are doing, what the market analysis is doing, maybe macroeconomic indicators, and also the economy. And this kind of data will show whether there's a strong demand moving into a new region, whether there are healthy margins moving into similar markets, and by using that information to help you make decisions rather than just jumping into a new region without too much analysis is certainly going to help you. Unless you have a full-time strategy team, which most startups and scale-ups don't. Again, this is something that the CFO can really help. So this data may reveal whether there's high customer churn rates, whether there is different ways that customer behave, different ways of improving customer retention, whether the product already exists, whether there are similar products, different competitors. All that kind of information and more you can look for when wanting to make those bigger decisions or riskier move. I know for within the UK, a lot of startups will start in the UK initially, and then once they have infiltrated the UK market and potentially have turned a profit, they may then look to expand into other regions, the most common one being either continental Europe or one of the bigger countries within continental Europe or the USA. Both of those regions behave very differently from the UK. I know this from lots of experience. And so if there hasn't been too much work on looking at the data within those two regions, then expanding internationally can be a big of a problem. And sometimes you're expecting certain type of service delivery that doesn't quite work, customer behavior that's not quite working, or your product or service is just not landing and people aren't interested. So again, there's certainly lots of data that you can look internally for internal decision making, but you cannot forget that when you are taking a more riskier project or decision, such as moving to another region, then data outside the company is also just important. Data challenges, certainly there are plenty within finance. And as I mentioned, the most important one is data quality. So making sure the data is really accurate, is really complete, and really timely. And then the other one I would say is data integration. So where systems aren't quite talking to each other, they're a bit siloed and making that comprehensive analysis a little bit difficult. So when you're thinking about the finance department standalone, it's much easier to take control of that. So essentially, you're working with your team, making sure that everything is accurate, potentially doing a mini due diligence every quarter, or just going through the balance sheet to make sure everything is as accurate as possible, improving the efficiency of data entry, and automating as much as possible. So it's much easier if you're just focusing on finance. Where sometimes it can get a little bit difficult is when you are looking to use data from other departments, and there's multiple reasons why sometimes this can be a challenge. One of the first ones is different definitions. So a perfect example is customer definitions. So I find that the main customer metric may be similar across the company, not necessarily, but often is. But the secondary customer metric may be different. Where I have seen the most common ones for customers is the finance department might consider someone to be a customer when they've made a payment, say within the current month. The marketing team may consider a customer when they're engaged with the product, whether they're paying or not. And tech may consider a customer as soon as they've been entered into the database and they've captured their emails. So making sure that there are multiple definitions of customer, if relevant, and then across the company, everybody understands what one type of customer is what definition. And sometimes you have to be very detailed, particularly with tech and operations, where they see all of the different nuances within a customer. So, for example, it might be somebody who has their email has been captured, they have engaged within the product or service, and they have made a payment within 30 days, and they haven't asked for a credit though within those 30 days. So that might be a definition of a customer. And if it's very detailed and spelt out like that, then everybody should be capturing the customer the same way. There may be instances where there's even more nuanced situations with that definition of a customer. And so bottoming out what those nuances are and agreeing that across the company is really, really important. And then if everyone has the same definition for the same piece of data, then there'll be a lot less challenges with sharing information, with coming up with the same results, with talking to the board about customer numbers, for example. There's many different reasons why this piece of work is really important. Another way of improving that is upgrading from a standalone general ledger to an ERP. Now, an ERP is incredibly expensive. They are becoming much more affordable with things like Light Ink or Odoo, for example. There's a couple of ERPs where they're not as expensive as the ones that have been around for ages, such as NetSuite, that's quite popular within scaleups. So it is becoming more affordable. However, it is still quite expensive. And the hardest part about an ERP is implementation. It will take you 6 to 12 months, and you will need a third party to help you implement, unless you have a guru in-house, which I doubt. I know that sounds rude, but you probably don't. So just because ERPs are so incredibly flexible and you can really configure every single part of it to be a certain way. And so if you don't have someone that knows what they're talking about and somebody that has used a system quite a bit in the past, then you definitely need a third party to do that. So that is the big negative with an ERP. But if you have inventory, if you have heavy customer services and then they don't currently have a CRM, I would highly recommend then an ERP. And the benefit of that is because everyone's using the one system, they're all got access to the one set of data and everything is defined a specific way. So that is one way of really leveraging a system to help you with data. I have to caveat that though, I have worked with a small SME, I would say, who had inventory, and there was an ERP that had been implemented not quite well, and so the inventory numbers were still a problem. So again, it's really important to make sure that you have someone implementing this properly. So artificial intelligence also helps with data in a lot of instances, or software with a lot of automation. So within the finance function, no one's keying in accounts payable invoices anymore. If you are, I'd stress that you take a look at HubDoc or Dex, but having people not enter data straight into the finance function has certainly helped. There's not perfect. You do need to manage these systems and have a look at exceptions. But with the advancements of AI and technology, you may find that people are spending more time dealing with exceptions rather than dealing with the day-to-day. And so there are less human error risks there. It's not perfect, but it's certainly less human risks. If you wanted to have a look at the tech stack that I recommend, every 6 months I do a video and give recommendations on the tech stack that I really like. The last one I did was in October 2025 at the point of this recording. So I'll leave a link for that above and below. But as I said, if you subscribe to this channel, you'll see the next one when I do an update in about 2-3 months time. So data, as I said, is incredibly important. I mean, we know this. We know data is really important. And if you're currently working for a startup or scale up, you probably already know how much you rely on data and can almost bet that all of you that are watching this video can say that the data that they're using, rely on, look at is not 100% accurate. And so that is the CFO or finance leader's job, is to make it accurate. And it's not a quick win. It's not something that's going to take overnight. It's something that's going to take you months, if not years. But it is so incredibly important that you make sure you take the time and it's added to your priority list and you look at it regularly and just keep working with the tech teams, the ops teams, the finance teams, third parties to get things accurate. It's not good enough to have data points that aren't accurate. Basically, over time, you'll probably lose your job if you ignore it. Like, that's very brutal, but that is exactly where we're at. And particularly if you're in a fast growth business. So if your business is expanding, and you're struggling with data already, you may need to look at things like a data lake or like everything in the cloud or whatever it is. You may need to make sure that you are on the forefront of protecting the data and making sure that it's where it should be. So, if you want to be a confident and skilled finance leader within the next 12 months, I would recommend that you look at the 3 steps that I am going to suggest here. The first one is to subscribe to this channel. I do a video every single Thursday, and you can take a look at that to help you with your finance leadership aspirations or role in a startup or scale up. The second one is to take a look at my book, Financial Leadership Fundamentals. At the end of every single chapter are actions that you can implement today. It's a very practical book. It's not theoretical at all. And it's full of my case studies and, of course, mistakes. And the third one is the FLF course, which is similar to the book. It has the same topics, but just goes into a lot more detail. And we also have monthly Q&A sessions where all of my students ask me plenty of questions that they can take away into their role. So if that sounds interesting to you, then please do click on the links below. Otherwise, I'll see you next week. Cheers.